Our tax revenues are 4.9 trillion. Our spending is 6.9 trillion. So we're spending 6.9 trillion, which means that we have a deficit of $2 trillion, which is about 7% of GDP. This is just, it's insane because we're not even in a recession. We're borrowing at a rate that's recessionary at a time we're not in a recession. So this is a problem, and I like to describe it is that if the US government was a company on the New York Stock Exchange, we would describe it as a zombie company. And what do I mean by that? I mean that the company doesn't make enough in earnings to cover its mandatory expenses and its interest on its debt.
Reformed hedge fund manager, sound money advocate, and the publisher of the Informationist newsletter, James Lavish, firmly believes that the United States economy, the world's strongest economy, and issuer of the world's reserve currency, is already in a debt spiral and most likely heading for a sovereign debt crisis, which involves the inability of an independent country to meet its liabilities as they come due. While this is a very serious issue for any country, it is even more serious for the United States, which primarily depends on investors, both foreign and domestic, being fully confident in its abilities to always fulfill its debt obligations. As soon as this confidence is completely eroded, the U.S. immediately loses its primary export, which has been the U.S. dollar for decades. Not only will countries stop requiring more dollars, but they will also rapidly begin to dump every cent they have, which will leave the U.S. economy practically flooded with unwanted dollars, leading to hyperinflation, stagflation, and eventually a collapse. According to Lavish, these problems boil down back to the government's unchecked borrowing and spending. The sound money advocate simplifies these issues in recent posts made on social media platform X. One post reads, "With annual spending of $6.95 trillion and taxes of $4.91 trillion, the U.S. government is currently overspending by $233 million per hour." Another post reads, "U.S. debt now stands at $35.3 trillion. If we were to return to 0% interest and make payments of $1 million per hour, it would take approximately 4,023 years, or until the year 6047, to bring the debt back down to zero." In another post, Lavish gives a dire warning. A system that relies on exponentially increasing levels of debt for each incremental unit of productivity eventually becomes so unstable that it simply collapses under the weight of its own leverage. He accompanies the post with a chart showing the vast difference between the federal debt in the U.S. and the country's GDP, proving how much of an issue the debt situation is, despite politicians and policymakers' insistence on pretending that all is well and good. Lavish discusses these pressing issues in detail in a recent interview with Blockworks Macro. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thank you and enjoy the video.
Now, why is this all so important? To get to your big question, the reason is because we are running massive deficits in the United States, and we're borrowing trillions of dollars annually, and we're adding that to our total debt load. So now our total debt load is 35.4 trillion. You had it on that US debt clock, and so we're running deficits that are about $2 trillion a year. Okay, how does this all work? GDP is our nominal GDP, and that's our productivity of the whole country. And then we're taxing that. So the government doesn't have any revenue. They just take our revenues, right? So we make revenue, they take them from us. And that's in the form of taxes and fees. And so the tax revenue right now is about $4.9 trillion. It would probably be a little bit higher this year along with the spending, but let's just use what the CBO's estimates were this summer. And we'll just use that because it's close enough within a few hundred billions of dollars. Our tax revenues are 4.9 trillion. Our spending is 6.9 trillion. So we're spending 6.9 trillion, which means that we have a deficit of $2 trillion, which is about 7% of GDP. This is just, it's insane because we're not even in a recession. We're borrowing at a rate that's recessionary at a time we're not in a recession. So this is a problem, and I like to describe it is that if the US government was a company on the New York Stock Exchange, we would describe it as a zombie company. And what do I mean by that? I mean that the company doesn't make enough in earnings to cover its mandatory expenses and its interest on its debt. Mind blowing, but let's just walk through it. So the mandatory expenses are things like, these are all things that are signed into legislation. They have to pay them, or else it's a default of some sort. So these are obligations that they're legally obliged to meet. So what are those? They're Social Security, Medicare, Medicaid, and a couple of other programs. But that's $4.1 trillion. So if you put that aside, that's 4.1 trillion out of the 4.9. We only have $800 billion left to spend. Well, we spent about $950 billion on defense this year that we know of. It could be more spending that's tucked into other categories. That's money, billions of dollars being sent out to Ukraine and wherever. But let's just call it $950 billion. This is not mandatory, but it's pretty mandatory. I mean, these are long-term defense contracts that they're not going to stop development on. So now you're at over $5 trillion. Let's call it 5.1 trillion. Then that's 5.1 trillion right there. So you're already overspending between your mandatory expenses and your defense. And then you haven't even talked about your interest on your debt, which you absolutely must. You must pay the interest on your debt, or else you default. And if you default, then your bonds get downgraded and your currency hyperdeflates because nobody believes in it anymore, and nobody's going to hold your bonds anymore. Nobody's going to allow you to borrow money from them anymore. And so the interest on our debt is over $1 trillion annually now. Okay, so let's call it the net interest, meaning that they're intergovernment agencies that are borrowing from each other. The net interest is about $900 billion. But you're at $6 trillion of expenses. Then that's before you have any of your discretionary expenses of almost $1 trillion, 900 something billion dollars. So your deficit is now $2 trillion. Well, how do you deal with that? Like, how do you deal with that deficit? You've got three choices. You can either cut spending, which we hear Trump talking about. Cut spending, cut all these programs. But the reality is, he'll spend money elsewhere. He'll cut spending out of programs that are not productive, things like the green energy and Inflation Reduction Act. Absolutely ludicrous how inflationary and non-productive those are.
Lavish and other sound money advocates believe the financial system is completely doomed because the three options available to take care of the problem will either cause more problems in the long run or will never be considered by politicians out of fear that they will lose their popularity. The first option, according to Lavish, is an austerity program, which would require the U.S. government to drastically cut back on mandatory expenses like Social Security, defense spending, and Medicare. No politician will ever consider this option for fear of losing the public's favor. Option number 2 is raising taxes, but again, no amount of taxing the rich will cover the huge gap between the government's debt and revenue. The final solution, which seems to be the path they've chosen, is to keep printing and piling up the debts until the inevitable collapse comes knocking and everything's completely wiped out.
You can either cut expenses, which is political suicide. Neither party will do it. They try to trick each other into doing it. Every time we have the debt ceiling come up, doesn't work. The debt ceiling gets raised and they spend the money. So that's not happening. The second thing you could do is raise taxes. And if you, there's a lot of debate about the Laffer curve and where this actually comes out. But at some point, when you raise taxes above a certain point, it's irrefutable that you start lowering productivity because you disincentivize companies and you strangle them, and so they can't reinvest in productive product lines. They can't invest in research and development. They can't hire more people, and so that productivity falls. So at some point, higher taxes gets you lower productivity, and you get to the same spot of total tax revenue. But the problem is now you're on declining productivity curve, and so that's bad. So you'll have lower lower revenues in the future, and so that doesn't really work. And we've seen that play out in a number of different countries. The third thing you can do is really simple, which is just borrow more money. Just issue more debt, print money in the times that you need to with liquidity crisis like we've done, and just keep issuing more debt, borrowing more money. Here's the issue with that, though. The more you issue debt, the more interest expense you have, the higher your deficits go, the more you need to borrow more money and issue more debt. And that's called the debt spiral. And you can think of it like a single parent who is struggling to pay bills and has 2 or 3 jobs and just can't meet their mandatory expenses of their mortgage or their rent, their gas for their car to get to their job, the food to put on the table for their family, and clothes and whatever. These are mandatory expenses. You can't, you have to feed your children. Obviously you can do whatever you can to meet these expenses. And so you take out a credit card to do that. Well, eventually you're paying interest on that credit card, and you max out that credit card, and you've got to get another credit card and do it again. And then eventually what you're doing is you're using credit cards to pay off old credit cards. And so you get into what's called a debt spiral. And so it's just this debt spiral you can't get out of, where more debt begets more interest expense, begets more debt, begets higher interest expense. So eventually what happens is that the country that's in a debt spiral, people start losing confidence in that currency. Why? Well, because they know they're printing it. They know that they're expanding the money supply to enable this. So what happens is the currency starts getting impacted. Now, even though the U.S. is in a debt spiral, which they are at this point, we are in it. There are ways we could fix it, but it doesn't appear that anybody's willing to do that in D.C. However, the U.S. has a great advantage of being the global reserve asset of the world with the U.S. Treasuries, and the global reserve currency with the dollar. And it's really because the dollar that we have the global reserve treasury, the asset of the treasuries, because people buy treasuries to get interest and then turn them into dollars later. The important thing here is that this is all the United States, as bad as it is the cleanest shirt in a pile of dirty laundry, as my friend Greg Foss likes to say. And he uses some other colorful analogy. Yeah. We won't use those here. But the point is that this can take a very long time. There is no way out of it. As another friend of mine, Lynn Alden, likes to say, nothing stops this train. And
Lavish, a self-described reformed hedge fund manager who left the traditional financial sector due to its deep systemic flaws, has long warned of a looming collapse of the global monetary system. Recently, his warnings have taken on a more urgent tone, particularly after the U.S. national debt surged to $33 trillion in September and then ballooned to $34 trillion in less than 4 months and $35 trillion in July. At $35.4 trillion, we are well on our way to adding another $1 trillion to the massive debt with absolutely no end in sight. Lavish argues that the U.S. is trapped in a destructive cycle of money printing, currency debasement, economic challenges, and even more money printing, which further erodes the value of the dollar. This is precisely why sound money advocates like Lavish invest heavily in hard assets like gold and Bitcoin, the hardest money there is, and urge everyone to do the same. What are your thoughts on James Lavish's apt analysis of the current economic situation in the United States? What are you doing to protect yourself from the storm that is about to hit? Please drop your comments and observations in the comments section below. Also, ensure you subscribe to the channel and turn on the notifications bell so you never miss any of our future uploads. Thanks for watching.